please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Headlines that we're tracking for you this evening. You're watching CNBC TV18 and this is Reporter's Diary. Straight to the big development on the controversy surrounding the terms of reference of the 15th Finance Commission. Now, 7 states have sent a draft memorandum to the President of India seeking an intervention on the issue. The draft, signed by chief ministers and finance ministers of these states, lists all the concerns and changes that the states are seeking. Nitya Balakrishnan, who has been tracking that story, is with us. Nitya, what are you picking up? In fact, we'll try to connect with Nitya in just a short while, but we have Lata Venkatesh with us. So, Lata, what do you make of this?
Well, it's clear now. 7 states have joined hands. It was 4 when they met at Thiruvananthapuram. Now 3 more states have joined hands. Well, there are, I guess, not so many non-BJP states left. But I think the demand is very, very clear. They want anything that seems to come against states getting a fair deal from the Finance Commission to be removed from the terms of reference. Remember, the President issues the terms of reference to the Finance Commission, but these states, southern states in particular, have been complaining that this one smacks of being partial to the centre, almost dictated by the centre. So there is a clause which says that the Commission may examine whether giving grants to bridge the revenue deficit can be done away with altogether. They want that sentence dropped, which means the Finance Commission shall ensure that money is transferred to bridge the revenue deficit of states which have the deficit. They've also asked other important statements to be removed. There is one condition, one of the terms of reference is that the 14th Finance Commission had given a considerable amount, transferred 42% to the states against the previous 13, until the 13th Finance Commission, 32% of the money of the pooled kitty coming to the states. The TOR, the terms of reference, asked the 15th Commission to review that. They want that entire paragraph dropped. That clause also wanted more funds to the centre to fulfill the New India program. The states, the 7 states want that thing dropped off altogether. There are several things that they want completely dropped from the terms of reference. The Commission was asked to measure states on several parameters. They want most of those parameters dropped. One of the parameters was, have the states made enough effort to deepen and widen tax collection on GST? Drop that. Efforts made by the states in terms of controlling replacement rate of population. Drop that phrase. There is a sentence saying how are states implementing flagship schemes of the Government of India. Knock that off. There is a phrase saying measure the states according to their increase in capital expenditure, eliminating losses in the power sector, improving quality of expenditure like which generates future income, capex basically. Drop that paragraph completely. There is a phrase asking the Finance Commission to measure states according to direct benefit transfer implementation. Drop that phrase. There is another condition saying, are states controlling their expenditure on populist schemes? Knock it off. These 7 states are saying. So they're just asking the Finance Commission, the President, to knock off several of the terms of reference granted to the Finance Commission. But the most important of them all, the monies are to be distributed based on population. Okay. That population, according to the terms of reference, was 2011 census. They want it to be the 1971 census.
Absolutely. Thank you so much, Lata, for taking us through that. So 7 states, they're telling the Commission what exactly they want to be dropped. On that note, it's time to take a look at all the trading action of the day. It was a positive start to the week with all indices closing in the green. The Nifty ended with gains of almost 1%. So let's bring that chart up for you. While the Sensex closed with gains of nearly 300 points. It was a good day for the banks as well, with that index gaining over 200 points in trade today. The mid-cap index also following the trend, closing up almost 150 points, as you can see on your screens. Onto the currency market then, the rupee today touched its lowest level in the last 15 months, breaching the 67 per dollar mark. The fall is seen as an impact of increased demand for dollar on the back of higher crude oil prices. And on that note, it is time for us to take a short break. But coming up, what does Warren Buffett think about the Bitcoin? We'll tell you on the other side of this short break. Stay tuned for that interview. And back home, there's a big development on the controversy surrounding the terms of reference of the 15th Finance Commission. 7 states have sent a draft memorandum to the President of India seeking his intervention on the issue. Now, the draft signed by chief ministers and finance ministers of these states lists all their concerns and changes that the states are seeking. Let's hear out the Finance Minister of Kerala, Thomas Isaac, on the issue.
What is exactly the proposal under the draft MOU as far as the state FMs are concerned?
See, Finance Commission, a constitutional body. Both the centers and both the center and states are equal before it. Now, central government, what they should have written the memorandum to the Finance Commission, they have made it the terms of reference. And they have privileged their schemes and interests at the cost of the states.
Sure.
And that is going to undermine federalism. Say, suppose states' borrowing power is half to 1.7%. What am I to do there? The states are going to be reduced to a level of municipality here, with no borrowing power. Suppose the tax share is reduced from 42% to I don't know what, as now indicated in the terms of reference.
Sure.
It's going to affect us. So this is going to be undermining the fiscal federalism in India.
Mr. Thomas, if I can ask you then, what is the way forward from this? Because are you hopeful that if you ask for change in terms of reference, what is the next step? Are you guys going to meet more in Delhi? Will you be taking it up to the President anytime soon?
India is still a democratic country. So whoever be the rulers, they have to take into account the public opinion.
Sure.
We are going to go to the people. We are petitioning the President of India. I hope they will heed to our prayers. If they don't, we will go to the public.
Is there a precedent for changing the terms of reference of a finance commission?
Yes, definitely. He can send to the Union Cabinet with a recommendation. They can look into it.
So that's Thomas Isaac there. And let's go across to Shireen Ban, who joins us now with a big newsmaker. Shireen, over to you.
Well, thanks very much, Arundhati. Joining us now is Hemendra Kothari of DSP. As CNBC TV18 reported, one of India's oldest financial firms, the DSP Group, has decided to end its decade-long partnership with the world's largest investment management firm, BlackRock. To take that conversation forward, we're now joined by DSP Group's Hemendra Kothari. Mr. Kothari, appreciate you joining us here on CNBC TV18. Take us through why this decision, sir. We are given to understand that BlackRock was interested in acquiring majority, and that was not something that you were keen on. So what has led to this particular decision?
Well, Shireen, thanks for this call. The reason very clearly and simply was DSP family comes 152 years of history, and I didn't want to, at my end, close the chapter. When I sold DSP investment management business to Merrill Lynch in 2006, I kept DSP fund management aside and to see that DSP continues as a family firm in financial services business. So this was one of the major reasons. And second was, we believe that we in India has a fantastic scope. I am very excited with the prospect of India and mutual fund business in India to grow at much different levels. So that was the reason. When both sides want majority, I think one side has to take a call that I don't want to sell, and that's what I took the call on that.
May I ask you if the offer was not compelling enough, or you were just not interested in selling majority, sir?
I was just not interested in selling. I think this has
so what is the
future great value creation fund management business is going to be.
Okay. What is the future now, sir? Would you look at a potential partner to replace BlackRock in future? What is the vision now going from here?
There is no idea of wanting another partner. BlackRock has been a good partner. Mr. Larry Fink and me are very good friends. We continue to remain friends for tomorrow also. I think so there was no reason for me to join hand with somebody else, and there is no thoughts in my mind.
Okay, that's not a thought at your mind at this point in time, but could that be a possibility that you would be open to? You talked about how you believe in the India opportunity and the potential for the India business. Could that be an opportunity that you will explore possibly sometime in the future? Have you had any other suitors approach you?
I've not thought about this at all, so there is no question at this moment of joining hand with somebody else. And foreseeable future, I don't even think of it, of having a partner.
So explain to us what is likely to change now post the decision to part ways with BlackRock. What is it going to mean in terms of possible differences with strategy? What is it going to mean in terms of how you've been functioning so far? Give me a sense of what we should expect in terms of changes now that BlackRock is no longer in the picture and the joint venture.
Frankly, in India, DSP, as Indian locally, we were managing the business ourselves. Of course, various compliance and various risk and quantity analysis, we were very closely in contact with each other, and they were very happy with whatever we were doing. There is not really much of a thing which I can say will be a miss when BlackRock is not going to be around. Though I will miss the feeling of comfort that BlackRock, the largest firm, if I require any guidance, they would be there, but not any otherwise. My people over here, they work with the process in investment in equity. So there is a way we work is a process, and it doesn't take a decision on just basis of rumor or something. We have research-based, fundamental basis we invest in India. So we have technology-wise, we are up to, and we will also have still access to BlackRock technology. So there is no problem on technology, though it is available in India. I don't think there is going to be much of a difference with what is BlackRock, DSP BlackRock, or going to be DSP tomorrow. And maybe we'll be very fast taking certain decisions, which in a partnership it takes time, though BlackRock did not try to delay us, I must say that, but it does take time.
Give me a sense of what decisions you may have wanted to take but were unable to on account of the partnership with BlackRock?
By and large, BlackRock was focused in international side of money raising, where we had certain times certain conflicts. But so we will be able to grow internationally, strategically much faster. If we want to raise money. I have been in this business of First India Fund in 1986. I was the person who brought Unit Trust of India to raise money outside and to create the basic structure. So first institutional investors came also at that time. So I have various friends, institutions, who which I hope in future I'll be able to go and or reach them. DSP is known to various international houses. And I think we will be able to expand internationally more than what we are there today. That's one plus point.
Okay, so
India,
international expansion,
And India,
international expansion is likely to be one of the focus areas for you now, you believe?
I think, look, see, first of all, in India itself, I feel there is a lot of prospects for us. We are already in online business in which we are trying to expand our online presence. We are expanding in the business with a local presence with most of the institution investors who are investing. And hopefully, in fact, will be many folds bigger than what we are today.
Okay. Just give me a sense of what the aspiration is now, sir. I'm taking a look at the latest numbers, and I believe it's about 16.5 billion in terms of assets under management if I look across equity, fixed income and alternatives, and this is the number as of the 30th of April 2018. Given where you are today, where do you see yourselves 5 years down the line? What's the aspiration?
I think we should reach 4 lakhs crores to 5 lakhs crores assets, which we hope we will be able to do that locally and internationally put together. Today we are about $20 billion just now. It is not 16 what you're talking about, $18 billion plus with international also, including in that. So I hopefully will be able to do larger amounts. We are not in few of the fields which will expand ourselves. Let's hope
Like which fields would you like to expand into?
let me keep it that for the time being. When we try to plan, we'll come back to you on that.
Okay, sir, I'll end then by asking you, I mean, it's been a decade-long partnership with BlackRock. What's been the big learning from Larry Fink and the BlackRock team?
I think he thinks ahead. He has a strategic view of the world. And also he focuses more on institutions and sovereign side money. And he has a knack of understanding the market quite well. And I think it's being close to him, to some extent, we also learned a few things. Everybody has his own way of looking at things. India, I think we believe we know better than any other international houses.
Okay, well, we wish you the very best of luck, Mr. Kothari. Thanks very much for joining us today to explain to us the rationale behind DSP and BlackRock ending that 10-year-old relationship. DSP buying out BlackRock in that 60-40 joint venture. Hemendra Kothari there on the plan ahead, international aspirations as well as the hope to take assets under management to about 4 to 5 lakh crore rupees. Before we head into a break, very quickly, here's an update. Chanda Kochhar on the investor call speaking, saying that there was no discussion on the Videocon matter in the board meeting today. So that is the clarification that has come in from Chanda Kochhar to analysts on the investor call. And secondly, Chanda Kochhar also clarifying that the board of ICICI is meeting tomorrow. This is part of the annual budget and strategy planning meeting that takes place, and the board of ICICI will be meeting tomorrow to take forward the budget and strategy planning conversation, which is part of its annual meeting. Also, the government nominee on the board of ICICI Bank did not attend the board meeting today. Chanda Kochhar saying that the government nominee was unable to attend the board meeting today. So those are the three important takeaways that have come in there from Chanda Kochhar on the analyst call that is currently underway. We'll take a break, but there's a lot more coming up. Don't go anywhere.
Well, the headlines that we're tracking for you this evening, and straight to the big development on the controversy surrounding the terms of reference of the 15th Finance Commission. 7 states have sent a draft memorandum to the President of India seeking his intervention on the issue. Now, the draft signed by chief ministers and finance ministers of these states list all their concerns and changes that the states are seeking. Here's the Finance Minister of West Bengal, Amit Mitra, on the issue.
Talk to us about the changes you really seek as far as the terms of reference of the 15th Finance Commission is concerned.
I think that's first and foremost, it is the fundamental question of being dictating to the Finance Commission. As per Article 280 bracket 4, Finance Commission cannot be dictated to.
True.
This is the fundamental in principle violation, that you change the terms of reference by adding terms of reference ideas that were never there before.
Interesting.
In practical terms, suppose that revenue deficit fund, which all states have got from 14th Finance Commission, it says you may consider not doing it. That means you're opening the door.
Absolutely.
In this manner, there are times and again, in this terms of reference change, things that are detrimental to the interest of the states. Plus, they also say that flagship projects, when the state takes those flagship projects, that will become a criteria of how you do well or not well with flagship projects. That means, in the name of flagship projects, your devolution may be cut back. Who knows?
Absolutely. The devolution and the impact of, devolution of funds to states is a big cause of concern.
Yes.
Have you addressed these issues in the draft memorandum that you're looking to present to the
Yes, absolutely. In the draft memorandum, which is to be vetted in the next 3 days by discussion with the chief ministers, we have laid down section by section where we are seeking amendments.
Absolutely.
I cannot refer to them because they are under review, but very shortly they would be available because an official memorandum will be presented to the President of India, which will contain para by para, section by section, where we feel the terms of reference ought to be changed.
But Dr. Mitra, the Prime Minister just a few days ago indicated there was no such issue between centre and states, and this is all probably just cooked up in a certain sense. Today, 7 states joined together. First meeting was just 4 states. Do you think more states will join you, as you indicate you will be submitting this to the President and seeking for a change in terms of reference?
I think probably what will happen is several states will join us, because every state in India will be adversely affected. So there will be the silent states who will privately come and say, egg us on, go on. But we have political constraint because they may be a BJP-ruled state. They may not be able to come out in public. They will support us, as it happened in GST Council.
But has there been precedent for changing the terms of reference?
Yes, in 2000, the 13th Finance Commission specifically changed major terms of references. It has happened plus minus in all finance commissions, including the 9th Finance Commission. But 13th Finance Commission had fundamental change. Therefore, I would say there is a precedence on a logical ground. It can be changed. So we have a very strong case, and we are hoping that this will become a movement. So it will be 3 types of states. One, those who privately tell us, go ahead, egg us on. There will be others who will openly join us. Like 4 states have become 7 states now. They're bound to become more by the time we get to the President of India.
All right, one final question, changing gears. A lot of you are members of the GST Council. 2 issues, one of course, cess on sugar and tax incentives for digital payments. Where do the members of the GST Council who were present here today stand on that issue?
It's interesting that almost all the members present here very strongly opposed the cess on sugar.
Interesting.
We had uniformly agreed that we will subsume all cesses. Few cesses which will remain will be a different component, that is for compensating states.
Absolutely.
And everybody has sacrificed it. All of a sudden you come up with one cess on one item. For whose benefit? And I may tell you that I was very clear in saying that it looks like benefit of one state or 2 states, Uttar Pradesh. Now, I asked specifically a very senior official whom I do not wish to name, how will you give it to the farmers? You're saying this, you will give it sugar farmers, sugar cane farmers? He said, oh, we'll give it to the mills. And the mills will distribute to the farmers. You and I know they'll never happen. What about jute from Bengal? Yes, it is an MRP. We want to cess as well. Rubber from Kerala as a commercial product.
Yes.
Food grains in Punjab were given a 14.5% purchase tax. So today they may come up and say, we want to see a cess. So you're opening up Pandora's box. Why? Only for small political gain. We don't know the reason. Same is for digital process. Who are you leaving out by this incentive 100 rupees? You're leaving out the entire rural sector.
True.
You're leaving out the composition scheme businesses. That is, any business that have less than 1 crore turnover can opt for the composition scheme. Do you know that it is clearly stated that they will not be getting any compensation? Because their GST is only 1% for industry, 1% for services. So how can you give them 2% reduction? And this will be a loss of revenue to the tune of 26,000 crores. In the initial calculations, in our view, it may be larger, because in the case of white goods and all this, which are all above 1,400 rupees, the estimate is done up to 1,400 rupees purchase.
Correct.
If you purchase more than 1,400 rupees, it's not part of the calculation. So my sense is, why give up GST revenue for so-called incentivizing those who are already using digital process, because the rural people will not.
Correct.
Those who don't have network will not. Small industry will not. Who are you benefiting and why? Makes no sense.
So completely opposed to it as far as the members today are
Absolutely, and 2 committees have been formed, and those will deliberate. I am very concerned about those committees, which I will speak about on a later occasion.
Yes, that too.
But the point is, there was strong opposition to the sugar cess. That is the reason why Honorable Union Finance Minister suggested, let's form a committee and discuss, and did not pass it in the GST Council by a vote or any such coercive method.
So 7 states that oppose the 15th Finance Commission. Amit Mitra confident that there will be more states before it goes to the President. Also, he says he's strongly against a sugar cess. On that note, it is time for us to slip into a short break. But we are on standby for Chanda Kochar, who is due to address the media in a short while from now. Remember, ICICI Bank just came out with their earnings. But news and updates continue on the other side. Stay tuned.